Greetings to all our investors, partners, and all those joining us for our investor update. My name is Kenny Fihler, Chief Executive Officer for Wholesale. I'm here to take you through how our business is growing in leaps and bounds through leveraging our strong client partnerships, identifying new market opportunities, and developing key focus areas to achieve consistent and sustainable growth for our business. We have a lot of exciting updates to share with you, so let us get started. As you have already seen, Standard Bank Group serves various clients, from individuals to corporates. Whilst we service three broad segments, this section of the presentation focuses on the wholesale segment, that is, large corporates and institutional clients doing business in Africa. Our strong sector capabilities and geographic presence have continued to deliver value for our clients and thus foster long-lasting, trusted partnerships based on mutual benefits. We are deliberate in focusing on clients doing business in Africa, comprised of multinational and large local corporates, and have a clear strategy. We deliver compelling client propositions through proactive partnerships, specialist expertise, on-the-ground presence, and balanced risk appetite to support our clients' growth in the 7 core sectors and 2 country-specific sectors. Our geographic and product diversification allow us to maintain sizable and resilient revenue streams, even in the wake of the COVID-19 pandemic that saw many institutions lose revenue. We continued to weather the storm. In 2020, our total revenue was larger than our competitors, with our wholesale segment looming larger than 2 of our peers combined. Our diversification, both from a business point of view and a regional perspective, kept us stable through a volatile market and robust even as markets fluctuate. The quality of the revenue streams remains strong through our transactional product and global market businesses. Multinationals and large local corporates continue to be our engine for growth. Multinational organizations are our backbone, providing a solid foundation of revenue. We have, however, seen good performance in our large local corporates and institutional client base with a 15% growth since 2018. Our portfolio is well balanced and remains stable from a risk management perspective. Our risk exposure is diversified across our core sectors to minimize concentration risk. Over the last few years, our credit loss ratio to customers has remained well below our bottom limit of our through-the-cycle range of 40 to 60 basis points. We continue to enjoy market-leading position in crucial solution sets across our investment banking, global market, and transactional product and services. As a recognized leader in the market, we are also honored to have received some of the most coveted accolades in our field, accolades we share with our incredible partners and dedicated colleagues. We are incredibly proud of partnerships with clients such as SA Taxi, which has enabled many previously disadvantaged individuals to achieve a means of employment, whilst at the same time improving the overall standard of mass transport in South Africa. As the importance of environmental, social, and governance considerations in capital allocation decision intensifies, we are well placed to contribute to the sustainable finance evolution with our clients. We have increased our originated sustainable finance business by an astonishing 27% for the first 6 months of this year, compared to the same 6-month period last year. The 2021 half-year revenues from our sustainable finance business have increased by 99% from the 2020 full-year revenues. Our total 2021 sustainable finance origination is expected to reach 20 billion rands, which will represent a doubling of our 2020 origination efforts. As we have shown, our growth trajectory remains steady and on course. Even though an uncertain global environment, our services and risk management have remained robust. We have managed to strengthen our existing relationships and acquire new clients. We grew our product market share in the countries we operate in. We gained significant growth across Africa by leveraging our sector expertise and capitalized on renewable energy opportunities. Optimizing our key client engagement processes has seen client experience improve and digital transactions continue to grow and expand. We concluded market-leading sustainable finance transactions. We placed the first retail sector sustainability-linked loan in South Africa with Woolworths and the first sustainability-linked bond in Africa with Netcare. As development, investment, and trade opportunities continue to grow within the African continent, we are well positioned to support this growth. These are the 5 strategic areas we'll be focusing on going forward, which I will take you through now. Our multinational and South African franchise relationships are a key focus for us. We have nurtured and developed a healthy client base that we continue to grow. Our multinational client base is the largest contributor to our revenue at 60%. We intend to maintain that through retention, growth, and acquisition strategies across our African footprint. South Africa remains a key franchise for our business. Maintaining our leadership position in this market remains important for us. We'll achieve this through utilizing our balance sheet and resources appropriately to unlock growth opportunities. Also, we are taking a renewed focus on the industrial sector to benefit from key growth themes emerging from this sector. In collaboration with the business and commercial segment, we have scoped the market opportunity on the back of selected clients in key growth markets across Africa. We expect an incremental revenue opportunity from this under-tapped client segment of local corporates. We'll achieve this through our concerted targeting of potential clients, offering a compelling value proposition, providing financial solutions that improve the client value chains, and continuing to enhance our client service. To drive Africa's growth, this is a must-win priority. We have identified core sectors in key regions that we intend to cultivate for future investment. We have the reach, the expertise, and the resources to achieve our targeted growth across the continent. To highlight a few, starting with the renewable energy opportunity in South Africa. This is a significant area of growth potential for ourselves and the broader energy needs of our clients. There is much needed investment to close the energy deficit across our continent. Therefore, supporting natural gas opportunities in resource-endowed places like Mozambique will massively improve the region's economic development. Just as energy is vital for economic growth, so too is infrastructure. To this end, we see growth prospects from rail, road, and port projects in East Africa and Nigeria. The West African region heralds substantial growth prospect, considering that Nigeria is our second largest franchise. While privatization opportunities are emerging in Angola, there are further industrialization opportunities from Ghana's import substitution drive. Optimizing our custody business provides opportunities for us to expand our prime brokerage offering and continue to maintain our leading 40% market share in South Africa. We are well positioned as a thought leader to these sectors and are at the crossroads of investment flows between global capital markets and corporates and institutions operating within sub-Saharan Africa. The bank interacts with various roles in the corporate client base. Each role requires a specialized digital interaction that makes experience situational and purposeful. To this end, the bank developed various specialized digital products. However, clients require these capabilities to interact with their own systems seamlessly. This led to the development of One Hub, a personalized digital platform where clients can access digital solutions provided by the bank as well as trusted partners. It brings together new electronic services into a unified client experience with a single sign-on, such as Know Your Customer, opening of accounts, and project origination, including foreign exchange. In addition, One Hub allows for co-creation with clients and the market through application program interface, commonly known as API services. We have already just under 170 clients on the platform, 17 partner users, and have won the Global Finance Award for Outstanding Innovation in Corporate Finance earlier this year. Ultimately, One Hub will revolutionize our client digital experience with us by adding value and reaffirming loyalty. The energy industry is fragmented. Companies requiring a stable supply of electricity have to navigate different technical solutions, varied suppliers, funding options, and legal and regulatory frameworks. All of this is time-consuming and challenging. Eventually, clients are currently mostly unaware or miss out on potential benefits of alternative energy solutions for their business, as there is no simple way to access. Therefore, there is an increased need for a decentralized energy solution in South Africa and across the continent. We have built PowerPulse as a solution to this challenge, an innovative digital offering designed and built to transform the way we deliver and consume energy, and which can be accessed via One Hub. Through PowerPulse, we are able to help clients to source alternative means of energy production with the support of vetted solution providers. This platform guides our clients in making the right technical decisions and selecting the right installation partners. This is then aligned to the most appropriate legal and funding solutions, all within the complex regulatory and approval environment. Ultimately, we can play a leading role in this ecosystem by connecting both our clients and vetted solution providers for value to be shared amongst all participants. This is just one more way for us to help build a sustainable future and offer more value to our clients. We see sustainable finance as a vital component of our future growth. ESG has taken center stage in the market's investment and capital allocation decisions. This provides us with an avenue for further partnership with our clients in their sustainability drive, especially as it relates to environmental and social outcomes. We have seen exponential growth of the global sustainable finance market, and we are able to provide our clients with market-leading ESG finance solutions, including green and social bonds. ESG-linked loans, sustainable trade solutions, and impact investing. Increased client interest on ESG solutions has continued to bolster our pipeline. Our 2021 gross origination across bonds and loans is expected to be twice that of 2020. Our expectations towards 2025 is premised on sub-Saharan Africa's economic rebound and the resultant revenue streams from growth opportunities across our continent, which we forecast will give us a CAGR of 6 to 8% for this period. At the same time, we are cognizant of the need to maintain discipline on cost and risk management. We are confident that through prudent cost management and efficient operational leverage, we can move our cost-to-income ratio to below 50% and maintain our credit loss ratio within the target range of 40 to 60 basis points. Ultimately, all these efforts will result in a return on equity in excess of 18%. With all that said, we trust that you can see that the wholesale client business draws on a solid foundation of our diversified portfolio across regions, sectors, and products, and a healthy client franchise. And at the same time, it is well positioned to capture opportunities and new revenue streams associated with the new emerging client needs. Thank you. We'll now go back to Lerato for the Q&A.